Hello, hello,
Testing,
testing,
testing.
testing.
Let me see if I can see. Hello, hello. Testing, testing. So I'm live now, I guess. Mm-hmm. Um, right. I don't know if somebody's there or not, but I'm going to start in the next 5 minutes. I'm gonna get coffee. I'm going to get a coffee. See you in 5 minutes. Okay, so I'll be back in a minute. right. Let's talking about this now. Okay, guys. Let's see. Am I live now? Yes. No. Let's see. Hello. Testing. Yes. So I'm going to share my screen in a minute. This is the problem we're gonna face now. This is the problem I'm facing myself all my life as a trader. What is the perfect stop loss? Yeah. So we're gonna look into that now. Right now, I got some problems where to find the perfect stop loss. So we're gonna discuss this now. All right. So let me share with you guys my screen. Let me share the screen. How does share the screen? This one here. What is it? Share the screen. I think I can share the screen on this one. Let me make sure I share it. So I'll make sure that I'm doing it correctly. I don't know if you're there or not. Let me see. Hello, testing. Can you hear me? Hello, testing. Okay, I think so. This is double microphone. You don't need double microphone. All right. So now you're supposed to see my screen. Now you can see my screen. All right. Can somebody tell me if you can hear me or not, please? Just say yes if somebody's there. Would be nice to know if somebody's yeah, you can hear me. Perfect. Okay, thank you, David. All right, so today the topic of today is one of my biggest problems I always face is actually how do I know is my perfect stop loss is there or not? And it's really a problem for me as well, because it's kind of dynamic. Okay, so as a stock trader, swing trader, day trader, I found this problem from day one, that you can actually have the problem of what is the perfect stop loss for me for a day, week, or a month is not the same as a stop loss that you have for just day trading, swing trading, or position trading. So what is the meaning of that? Why stock traders, they're always doing well? Well, they're doing always well. They need to know how to do it, but how do you know that stock traders, they're doing better normally? No day traders, stocks, talking about position traders, because they don't have a stop loss. Just simple. They just it's zero. So, and that is what making guarantee to have more chance to be profitable in the long run. Yeah, because they're just going long. This is rule number one for the stocks, and rule number two is just not have a stop loss. Yeah, but me as a trader, swing, day trader, and position trader, I do actually have a stop loss. So how do I know my stop loss is the right one? So let's talk about that now. And it depends of where and for how long you're gonna hold it. So let's talking about I go Euro CHF now here, which is going to hit my stop loss. Yeah, this one here. All right. So how do I know this was the right stop loss or not? The answer is I don't know in principle, but I can guess a probability what can be the right stop loss, not 100%, but just by big chance to see which one is the best option possible. So people use indicators like typical for stop losses is the DC. What is DC 20? It's actually average range of the highs and the lows, and you can actually go for the flow. Similar to Bollinger Band, you can look at it on the internet. What is the meaning exactly? But on the end of the day, without making any modifications, yeah, you just actually got a low level, high level, and a medium like a Bollinger, the same principle. And this is actually used to know where it's been hit and where is my stop loss, what can be my target. So This is an example of how they use this indicator. So we're going to talk about the indicator. Doesn't mean that we're going to talk about the stop loss, but let's talking about first. Let's see a first question. How long am I going to hold my trade? So in my case, particular case, I hold trades for a week. So it means if I open on Monday, Tuesday, Wednesday, I will close on that week. So it means it's maximum of 5 days. So will I use my stop loss 5 days to use it as a reference? So let's have a look at that example. For example, let's go back to what is called naked charts and to understand that principle. So if I'm gonna hold it for a date, yeah, and let's say I got a trade, let's go for Monday. What is Monday here? We got this Monday here, yeah, and I decided to go short. Even if this is a massive uptrend, I decided to go short here for any particular reasons. I decided to go short and I got my entry here. So now, will you, let's remove, I don't know if I can remove all the lines, it's fine, you just keep it there. Let's make an example, what will be my stop loss? Okay, if you do have your stop loss all the way up here, yeah, which is the highs of the candle, and then you got your entry on this daily candle, and then you have another day moving forward, you go to your daily there, and you go here. But what is the problem to have a stop loss that big? The problem for half a stop loss that big is your win rate is going to be very low. So your risk and reward will going to be very low. So let me show you. Your win rate will be bigger, but 1-to-1 or even less. Let's do a short. So if I took position short, let's say on the open, and I want to hold these positions based on that, let me go here. That will be my initial stop loss. Let's see what happens, yeah? So first I got a stop loss there, and then my trade start to, let's say I got a 3 hours target. 3 hours will be let's say here, yeah, there. So I just open the market and I go in short. Very lucky, I would say that's very lucky. Normally you have in between all this area. So let's be more realistic. Let's say that you open in the middle, yeah, and you're looking for 3 hours. Now you're looking for 3 hours. It's made a big difference now, you see. Okay, now you are all the way here. Now, this is Monday, Tuesday, Wednesday, Thursday, and Friday. Now, if you follow the highs of the day, yeah, because you got 5 days trading, so this will be the second stop loss. This will be the third stop loss. So what happens then on Friday? You go Friday here, and you go your stop loss there. You decide to close the trade. Done. So, oh, Danny, but this continue down after that, and I would be able to make money on the next day. Well, you have made the decision to trade for a week. So what happens then? You actually lost the opportunity to make more because you make a plan. If you make a plan for a week, for 10 days, then your question is that, do I have to have the stop loss of the week? Yeah. And this is one of the advantages to start trading the day of the days, beginnings of the week, beginnings of the Monday and Tuesday, because you got the beginnings of the week as well. So let's go now to the week sample. In that sample that we're just talking about, let me make it a bit bigger. Hold on, there, and you say I'm going to do the same thing. It was somewhere in the middle. I'm gonna go for a week. Yeah. Now I'm looking for 3 hours. I open my trade. I'm going short. You're very clever, you actually know where the market's gonna go, and you shoot in short, yeah? So what happens then? You go short and you have your entry in there. Now, you hold it for more than a week. Will your stop loss will be the highs of that point as well? Well, in this case, both of them, they are Monday, and both of them, they are weekly. So potentially, you can say I can hold it for longer because this is my weekly stop loss, yeah? So, and I'm looking for 3 hours. So will you be able to hold it for 2 weeks and pay the commission? Remember, you need to pay on the weekends and so on. Will you hold it without touching it? Will you move in the daily down, or you just moving into the weekly? So you just move down into the weekly. If we do that and we go into the daily. So what happens then on Monday on the next week, which is this here, you go another low. So it means you haven't touched the daily because this is your weekly. Yeah, now you say I'm gonna hold it until I hit 3 hours. So you open there, somewhere in the middle, which said that's for those ones that not, and then you just start to hold it all the way here. Now, you hit 3 hours, you take your profit. Yeah, but this is my problem now. This is another Monday coming. Let's see, here, another Monday here. So you go another Monday here. will you be able to put your stop loss in there? What happens then? You close your trade here with this less than 3 hours, correct? Yeah. Now, is anything else that we can actually work out to see how we can make money in all this and get this low? Because in reality, all this is all the way down here. Yeah. So this will be 4.62 hours, a bit lower than that. It will be there. So that will be a 483. Okay, but the problem now is that how am I gonna hold it all the way down? Yeah, and it's for me is that am I moving my stop loss? Because maybe, okay, let's say that you got £100. Yeah, okay, now you can see moving here £100, 120, 130. You need to look at the market. You see go all the way down here and you have 424. Yeah, and then you can see it's going back again up, and here, and you can see that's back one to £100. Let's make it more painful. Yeah, don't know, £10,000 or £100,000. Well, let's make it 10,000. That's painful enough for me. You see 10,000 down, and you see 40,200. But my target is, let's say by luck, I know exactly what the exit is. It's going to be 40,078. Yeah. So you see 47,000 instead of 42,000. So a bias go all the way up again, and you go now 12,000. So you see now the pain is there coming up. What do? You see, if you follow the trend, doesn't matter if it's daily, if it's swing trading, position trading. If you follow all the candles, you will end up to be closed up by pain, by suffering, by problems that you're facing, and so on. So you need to find a reasonable way to find a stop loss. Let's use now, having used this for a while, we're going to use the Bollinger. Yeah, so let's say that your plan is to make a, let's say again, all the way down there. Okay, so how am I going to survive all these downs and up? First, you don't look in the charts. Just forget about it. You don't touch it, you don't play with it, you don't do anything. Now, would you like to have a stop loss secure, which means something is moving with it and going with it to play with? This is not going to kill your trade. So this is a total of weeks. Yeah. So we can actually use the weekly candles and push it that way. Another week, another week, another week, another week. And what will happen? You see on this particular candle, it will be close me down there. See, it's not safe because as always we like to take the liquidities before they go down. So this candle take 3 weeks of liquidity before they continue down. Yes. So it's anything that we can use for any indicator, any tools that can help us to actually prevent this movement and not kill our trade. First, what the stock traders do, they do not touch the trades. They don't touch the stop loss. They don't care. They just hold it and hold it and hold it, and maybe they're actually looking for maybe 100%, 200%. They got a number in their heads, or they're looking for a month, 3 months holding. So this is different, yeah. But how we can actually make ourselves, protect ourselves? I know this is the high, this is the highs, and so on, because this is 3 weeks in the middle. All right, so let's have a look at an example of a Bollinger, yeah. Let's see if they can help us, yeah. So remember this week here, kill all these 3 weeks. Let's make a note in there. All right, here, there. Okay, so this is bad one because it kill everything. So we need to find something that is holding there, is holding here, and it holds in there without being touched this one. So let's go into, let's find the Bollinger. Let's see, what is the indicators here? Bollinger Barnes. So where is the classic one? I think I have it somewhere in my favorites. Bollinger, no, I don't have it even. So let's use the classic one, yeah? So we got a classic Bollinger Band and we're looking for to see if this can help us to prevent our stop loss until we get the target being done. So how people use the Bollinger Bands, yeah? One of the things they use Bollinger Band is to take into account the candles has been touched, the Bollinger Band. So for example, if you got an example of Bollinger Bars here, if you see it's went beyond the banded, it's actually went below, and it became a kind of a strong exit, or this could be another one strong, But when is the end? The end is when you just got, for example, let's say you got all these wicks coming in, you got this candle coming in, you go more low out, but then you got another wick here. But in reality, this is the biggest moment when they actually create a body. It went all the way down, like this example here. You got another body, another body, another body, another body, and the first time they went away with the exit already. So this is very solid, the stop loss for a long time. Yeah. Now, if we use that principle, let's do the same thing on the other way. So we have this area here as extreme, because what is Bollinger Band? This Bollinger Band is just an extreme situation on the market. So in this case, we go an extreme situation that this will be my stop loss. Is it safe? Yes. You see, even they went all the way up, but didn't touch the stop loss. So this is safe, the last one. Why do you need to say this is the last one? When you go a candle already into the bandings, you know, inside. So this case here, this is inside, this is what we call it the stop loss, yeah? Now, when all play around, this has been touched, yeah? But this is another low here. It's not, and this is the first one inside. But it's not a body inside, this is a body inside, you see that? All right, so we keep going again, and we got the same principle apply. 1, 2, 3, 4 candles, 5 candles. And in this case, look, that principle is supposed to be work, yeah? So we got this candle here, and this one hit that, and I lost the trade. So you see, nothing works 100%, okay? So now we have made the decision to make that. Is actually important to be aware of that. You see, this is a rule for them. Now, what we can do instead of? If you notice, there is something that is follow up, which is the red line, yeah? You see that red line, and you go all the way up, all the way down, and so on. So what about if that can be my stop loss? But this is massive, yeah? Yeah, this is massive if you use this as a reference. But you see that if you are on this day here, yeah, your stop loss will be this one here. There. Where is the red line? There, exactly there. So that is there. So you come up this day, and this day kill all the wicks, and this day included, but I didn't kill the Bollinger Band. Yeah. So if that is an option to be used, well, in this particular case, it work if you do follow. Let's say, okay, I want to hold it forever, and you got all this line moving around, and you are, let's say that you are in here, on there, on there, on there, and here you can move your stop loss just in the same place almost, yeah? But first, okay, then what do you mean? It was like, do I move my stop loss there? Well, in this case, you got to start from the wick. You can start from this low, you can use the last high, it's been killed, because this one is killed all this. So will you take this one, and then you just move it into that option. You see it's going up, it's going down. Now your stop loss is here. You see, let me move another one. But if that is the ideal one, we're gonna discuss this. You know how important it is to know the right stop loss. The shorter the stop loss is, the more profit you're going to make. If I know that this is going to work here perfectly well by 1 minute or 3 minutes, I will make 100 R. Yes, so 1%, 1,000 pounds, 100,000. So how I can actually utilize that? This is one of the biggest problems that traders face, is that where is my exit? Yeah. So the question is that maybe it's not about the stop loss, maybe it's about the exit. So for example, in this case here, you can actually see the exit, it was happen here, potentially, that one. It was the first time touch the green line. You say, okay, I can follow the same principle. I go on a stop loss, follow it. Yeah, I can follow up my trend. I can follow the indicator, whatever you want indicators, you just hold it, you bought there, it's doing well. And you say, oof, almost hit this line. But in this case, you hit a line, you get out. So what happens then? Let's get out there. So what will happen? You close on this level, which will be for 40,000 in the previous sample, but it went a little bit down, a little bit more, and then went all the way to 47,000. So you lost 7,000 on profit. Will that be a good indication to get out? I don't know. You tell me, because maybe this here, it couldn't be another entry, because after doing these highs, you can have another entry here on there. Now, why this I'm telling you two entries different? Look, if you take this entry here, short in there, let's do all the way to the target, was hit in this case, yeah? So you got this entry there. Now, you decide that your target is going to be all the way down to the other extreme, which is can be this low here. Okay, so we're gonna go all the way there. Now, it's not been hit yet. Yeah, it's an extreme situation that we're looking for. We're looking for to break this low here, like some people was waiting to break this high here. Not the candles, the shadows on top of the candles. Yeah, this here, and they hit it and they went down. Now, if you notice now, it went all the way down, it went all the way up. Now we got another opportunity here. There was wick, and then we go inside again. So potentially I have another entry here. So what does that mean? So it means that I can use this information that I go there, move my stop loss to from there all the way here. So instead of have 40,000 pounds in my pocket, I'm going to actually put 40,000 here at this level. So let me show you there. So what is the meaning of that? If I go a second entry in there, I can actually risk it 40,000. Say, well, this is stock traders doing that kind of similar to that, but this you don't want to risk in 40,000. You may be risking 50% or 10% of your running profit. So then in this case, you say, I'm going to risk it a 10%. In that case, what will happen? You're risking a 40K plus you're risking a 10K more, yeah, in this period of time. Now, if both hit the target, yeah, which is down there, all the way down there, this will be a total of a 10 Rs, which is actually 100,000, and this will be 10 times 80,000, 7.9, so 79,000. So this case, but what is the difference between those two is that in this case, you have risking a, let's say 10,000 pounds to make 40. And in this case, you're risking nothing. You're risking profit. You're risking your profit running. So I mean, you're risking only that amount. Imagine that the trade is going all the way up here. You lost your trade and you close everything at once. So that's it. So you go 30,000 in your pocket. But now because it was continue running, you go all the way down here. And potentially you have a 100,000 horizontal or process target, and you go another one into 79,000 without risking anything extra. So now, you see, sometimes what I try to explain to you guys is not about to know, because everything is like elastic band. The market is going up and down and up all the time. So the question is that is the right thing to have my stop loss based on Bollinger's, based on whatever tools you want to use. ATR is about to use it for example, let me show you another example. This ATR here. So this is the classic ATR, and what I do myself, I just know exactly how much percentage average, you see these numbers, is kind of an average, how much is moving in an average in a week. So in this case, it's been moved 0.94 so far this week. So, but the reality, if you notice, is 0.9, 0.9, 1, 1, 1. It's not moving much compared with this period here. It was 140, 140, 130, 128. So I would say that this average, it was 1, even they go 3%, but let's talking about the average was 140, 130, yeah? In this case, the market have changed and it moved less because we got, market doesn't know what to do after August. It's not going anywhere. If you see it's ranging. So we got an average of 1.1, yeah, 1.1. Now it's been done already, 0.94. So then you need to thinking, okay, am I going to hold it longer? Well, if I want to hold it for longer, because I believe this market is going to continue short, then you need to change, for example, for ATR monthly. So in this case, what is the average of the last 10 or 20 months? And you say, oh, the average is 3, 2, 2, 2, let's say is about 2.5. So in the average was 2.5, some cases extremes, you see 4 and 4 and all that. But in general, you go 4.5 average. So this is important for you to understand the process of the market working out. So thinking about that, who said that? Hi Daniel. Somebody say hi to me. Christy. All right, perfect. So in this case, you got a ATR of 4%, 2%. So let's call it 2.5. Yes, let's can call it 2.5, the majority of the cases, because you say 2.5, 2.5, 2.5, I will have one to, let's say that from this month of 2024, 2.5 hit. This is hit. This is no, it's 2.49. This is hit, not hitting, it start to go down. So I'm gonna go for 2.4. Then I go 90% probabilities of hitting the target. Now it's been moving this month so far 2.26. So how much more room I go in this one? It's only 0.2. Yeah, so this is important to be aware of that. For example, if you actually focus in the last 20 and you're looking to make 2.50, your expectation is a bit larger than normal. So then you're losing a ground. So you need to understand that the market dynamic right now maybe is not moving as much as before. And we are normally in August, typical August with this here, normally move less in general, but in this case was moved 2.4. Okay. So let's make another example. Let's talk about the ATR because it's not about only the stop loss. It's about the stop loss could be your exit. I mean, when I get out, yeah. So it's how much you can stretching off, how much you can, because it's not about to. Many people are talking about the stop loss. Yes, I agree with you. That need to be, it's important. And if you do know how to push your stop loss lower, and adding or moving with your entry up. At one point, it's going to be closed because you're just pushing. So let's think about that for 1 second. Let's go now to, well, in this case, 2.26 for Euro CHF. How much room do we have before the end of the month? So if it's 2.4, our decision, so we go only 2.2. So 0.2 to hit the target, even less than that because it's almost 0. So I go 0.1. It is worth it for me to enter this trade? And the answer is no. Yeah, you will lose the probability to make more. So, by the way, I have entered this and I have break even. And that was my mistake. I was looking for previous months and not from current month. So my average was actually down even without notice. So that was a mistake I have made, just to let you know. Okay? So now, let's go for another example. Let's say, for example, a euro dollar. Yeah. Oops. Well, I'll show you the numbers only. First, let's think about only the numbers for now. Imagine that you just want to go long, short, doesn't matter whatever direction you want to go, and in favor of the euro dollar to go long. But let's see how much has been moved this month. This is the current month, and we have the typical ATR by numbers is here. But if you notice, the same thing applies. You see, let's go all the way up to 2024. So we go 3.6654. You see, and I can actually get a tool to give me the average, but I'd rather to look at it myself manually, because I make the decision where. Because if you start making averages, you actually can end up to get a random distribution. I prefer to choose the distribution. I'm gonna choose this January, and I go 3.6. If I choose 3.4, how many I will have profit? 1, 2, 3, 4. Oh no, 3.6, 3. Okay, I wanna go down. I want to have 90%. So let's go down to 3. What's the loss so far? 3.2. Okay, 3.2. Win. Loss. Win. If you look at how big this one is, beautiful, but I don't have it. 3.2. 3.2. We have finished the month, and we are just on the 7th, but the month has been completed. It's done. Finito. So what would happen for many traders? They will try to make more. They will lose the money. Yeah, including myself, because you're desperate to looking for an entry to make sure they hit the target, but the target has already been there. 3.2 is the average of the last 2 years. Why are you gonna go into? Because maybe it's going to be 7%, or maybe it's gonna be 5%. Well, then you start to losing the plot. Yeah, so better to actually to make the decision first before you're going into. You can use the last 12 months, you can use the last 6 months, whatever you want, but this is the monthly. What about the weekly? Maybe I go a chance on the weekly trading instead of holding for a month. I want to hold them for a week. Let's have a look. So we go for a week, and we're gonna look into that as well. So let's say that I'm going to look the last or whatever number of period, 10, 12, whatever number of months. So let's say 1.8 is my decision. Let's see, 1, 2, 3, loss, 1, 2, loss. Okay, I'm gonna go down then. 1.6, 1.7, 1.7, win. And this is win. 1.6 loss, win. All this is loss. Ooh, too many losses. I'm gonna go to 1.6 now. So all winners, winner, loss, and this one is still 0. Nothing to hit the target. So you have to be careful when you make your decisions. So beginnings of the month, I made my decision. what is the target for the month? What is the target for the week? It is worth it to continue trading. Maybe not. Are you thinking, well, Daniel, well, you're going to stop trading the whole month? Well, if there's nothing to be traded, I don't know. I need to check the 28 pairs. Will I have any other chance with the other 28 pairs? I don't know. So in this case, it's over. I cannot trade more. So if you cannot trade more because there is no target, why are you going to trade it on? So, oh no, but my strategy is this and that. Okay, well, okay, fine. Just because your strategy say yes, go ahead. I'm just talking about a stop loss and target. Your target can be your stop loss, and the stop loss can be used something. One of the examples is the ATR that can be used. Another example we have been giving you is actually the Bollinger, and you can use the DC20. It's very popular as well. It's more like a not fluctuation. It's more like a fixed number. They take always the highs and they get stuck with it. If you notice, the highs and the lows, I create highs, lows, highs. It's quite easy to see it. I don't use it. I have it there. I don't know why, but it's more for the PT entry that we have for the STT. But it's this. You can see what is the highs. This is the highs. So look, let me show you. So if you see, they select the highs, and it's high, and I make it this high, low, highs. So if you want to have this kind of way of easy to understand the highs, lows, highs, this C20 is quite good example. Now, if you want to use the Bollingers, as I explained to you, for actually fluctuation to see when the strings happens, then you can use the Bollinger and use it as well. Sometimes, not anymore. Let me remove it, by the way. Not interested to use anymore. So, and then as I explained as well, you can actually use for me, the ATR 20 is the most popular for me. So, because it's just how much the market is moving today, how much market will move tomorrow. So that's it. So, okay. So guys, do you want me to talk about anything else about a stop loss or any other things like that? Any other indicators that you're thinking is worth it to be discussed now? Let me know. Let me ask you a question in the chat. No? All right, can you see me, guys? Let me see. Okay, guys, so this is important for all of you. So this is to finalize this a summary of how to find a stop loss. It's a very, very delicate part of the trading, and you must to focus into not only your stop loss. It's very important that you find the right stop loss, looking by probabilities. What is the right stop loss to have? Can we use Bollingers? We discussed the Bollingers. You can use the ATR as a reference. ATR is more for targets, in my opinion, for me, but you can actually have as a reference the highs and the low of the ATR to see if it's moved the whole range already, both sides, because you don't know the direction. So let's say that you're looking for a weekly and you know that's going to move 1%. So then you know that can be moved 1% up or 1% down. Yeah, it can happen during the month. So in some cases, if you already have been moving into your direction that you've been expected to move, and you see already will move 1.4, and your target it was 1.5, then you enter in 1.2, maybe it's not worth it to enter anymore because there's not enough room for you to make money. Yeah, so be aware of that. Now, thinking about as well that it's like an elastic band. So when you're looking into the trades, you're looking into that is like an elastic band. Imagine that you just pull it out like gonna throw an arrow, yeah. And when you got all the way back, this is the beginnings of your entry. if you go the right entry. Because why? Because normally people do the opposite. They start trading when it's going up, the entries, the first entry, or the entry when they're going down, on the direction of the down. When it's down, 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 I'm going in, everyone is going in. When it's going up, I'm going up. No, the key is not, is to actually, sorry, is to do the opposite. So if you're looking to go down, you're waiting to go up first and then you go down. I don't know if you get that. Yeah. So you're looking for the market to go into your direction of your entry, and then you take it. And it's difficult because you see, oh, it's going away of me. It's going away from me. It's going away from me. Instead of going in my direction, short or long, it's going opposite. And now I'm gonna enter. It's a bit painful, that. Okay. So be aware of that. Psychologically, it's important. But if you have your plan correctly, it's not talking about full reversal because maybe the market is already making your movement. It's about to have a pullback into that in that direction that you're looking for. Is when you're supposed to enter on the pullbacks. Yeah, don't go in when you see the market is collapsing. If you already take out the top and you go the chance, yes, perfect. But if you actually have the market is already going in your direction drastically, you just wait for half enough room. It will be bouncing back. Don't worry. Elastic band is like a ball. It will be bouncing back on maybe 60%, 40%, 60, 70%. It will go all the way up, and then you can take it again, another entry, and take it down, push back again. So be aware of that. So stop losses, Bollinger Band, ATR. You can double your own candles. It's like you can say, okay, if the movement of the week, I can use the Asian market, I can use the New York opens, I can use. So you can choose between all those options, yeah. But remember that weekly, daily is important to be taken into account because that is what the bank's looking for too. So if the weekly is not being broken and you're looking for short, maybe it's a good direction for going in. So this is be aware of that. So all those little nuggets, always looking for the bigger picture, monthly, weekly. This is we start the month just now. So weekly, daily. So this daily is just a bit tricky. Yes, I will go even for weekly. Okay, a confirmation weekly with daily. If you go those two together and it's going into your direction, going in, you have a very, very good stop loss. Now the next step is to be able to have patience and holding it. From that perspective, then you can actually start to learn how to zoom in and have a beta stop loss. And beta. Like me, I go entries now in 3 minutes. What will happen? You will lose more. Yeah, because you just try to squeeze as much possible, and that will be more difficult for you to be able to be profitable, and you will lose big opportunities. Yeah, because you squeeze, and so much squeeze to make $100. Amazing, but you lose 1, 2, 3, 4. You lose more. Yeah. So can you lose 10 and make 100? Yes. Can you? I don't know. Can you? If you, as like the example we given earlier. If you're risking 1 hour or 10,000, 1,000 pounds to make 3, 4,000 or 40,000, 60,000, maybe this is your strategy. You don't need more, but you're risking 10,000. That is where you can risk 1% of your account, 2% of your account, 3% of your account. Yeah, so that is actually realistically possible. Yeah, okay, if you're risking that, then you know that the market direction, it will take me 1 month to hit 4 hours, and 1 month after I make 40k. Perfect. You see, that is what I try to explain. It's not about the number of hours. It's about to have clear your stop loss and your target, and that is where you build your plan. No stop loss, no target. You don't have a plan. And many of you will say, "Oh, just 3 hours." Wrong. Just 6 hours. Wrong. You just need to have a reasoning to get out. Don't give me a 3.2 hours. Because it's what is need to be for me to calculate that I'm going to be more profitable than losing blah 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 blue. No, find the reason, because you find 1,000 reasons to go and enter. So find me the 1,000 reasons to go and exit. Then you will have a perfect strategy. So if you do not focus on your exit and you don't focus into your entry, in the stop loss, could be your exit, could be the target, you will not be able to be moving forward in life as a trader. So guys, I hope you like this video. I can go deep and spend hours and hours on this topic because it's something I'm working daily. But this is, I think, is good for you. This is more basic. And remember, stop loss, target, make sure it's clear, start zoom out weekly, daily, see where is the correlations between those two. Ideal is when it's being cleaned up. What is the meaning of that? When the daily is being broken and it's go back into your direction, when the weekly is being broken and it's go back to your direction. This is the ideal places because it's already gone. The money's been taken. You know, whatever money was there, remember we checked that last week, those bubbles there, those little liquidities being taken, why am I gonna go back there? If already been take the weekly highs or the low or the daily highs. Sometimes it's not even taking it, it's just actually create a new high and it's just moving short, or they're moving up. So be aware of that as well. That's what happened and they're going away without you. What do you do in those cases? You take the trade halfway, you do nothing, so make sure that you make notes of that too. Yeah, because you don't want to be emotions telling you to go in, yeah, losing the plot. All right, so planning is important, stop loss, target, the rest can be building from there. Make it bigger, make it big, you know, 3 hours, 1 month. Can you do that? Just try it. Try and a simple, open a demo account and open one trade, hold it for 3 months, hold it for 1 month, see how it works, see what happens. You say, well, that's too much. Okay, but just talking about that you use a demo account. You just £1, £10, £100. If you go demo account, maybe 100,000, you put 10,000 in each entry, 5 entry at once. That's it, done. Or 10 entries, you lost the whole account if it happens. It's silly, but just try to do that, see what happens. And see how many of those will go into your target direction. Yeah, that's it. So just to be able to have a clear stop loss and target. Alright guys, so hope you like this video. So I will come back with more next week. It's going to be more educational and I need to go back into the World Cup competition, which I'm suffering to get into back to the table. It's difficult, those guys, they're doing very well. So for that thing, I will need to take more risk, which is, I don't like it. So I need to increase my risk now to be able to push to be into the top table. So guys, see you around and see you next week. Any question, remember I am on Discord always at City Traders Imperium for any feedback or from any, maybe you want me to discuss something specific. Let me know because I saw thousands of topics. Actually, I had 972 topics that I can discuss. Maybe you have more or something else new, let me know. So yeah, that's it. So hope you like this guys. So bye now and see you on the next video. Bye now.